Welcome to the Voice of Insurance. I'm Mark Gagan. Now, earlier in the month, global broker Gallagher bought out 100% ownership of Capsicum Re. That's the reinsurance broker it founded as a joint venture with former Benfield boss Graeme Chilton back in 2013. In its 6 years in operation, Capsicum has grown to become the fifth largest reinsurance broker. And as such, the move successfully caps decades of frustrated ambition within Gallagher's to break into the reinsurance world. So following the deal, the Voice of Insurance caught up with Capsicum Re CEO Rupert and Simon Matson, who is the CEO of Gallagher's UK broking and underwriting division. I very much enjoyed my time with Simon and Rupert, and I hope you do too. As you'd imagine, there's all the talk about what the plans are for Gallagher's new reinsurance intermediary, but there are a lot of other market insights blended in, which I think are worth tuning in for. Now, the first voice you'll hear after mine belongs to Rupert, and then it's over to Simon. What's the scale of your ambition now that you've got the resources of a major global intermediary behind you, Rupert? You've just done this deal.
So the scale of the ambition is really at the moment is no more than to start off on the next phase of the Capsicum Re development journey. The first phase is very clearly defined as start a company, build a company, sell a company, do all of that in the vision of Gallagher, make the company such that Gallagher would be proud to own 100% of it. That was what the mission statement of the first phase was, and as you say, we successfully completed on that last Monday, and now it's, well, how do we take everything that we've done over the last 5 years of trading and find a way to maximise that opportunity to deliver for Gallagher a thriving, growing reinsurance opportunity by dialing into all of their skills, their capabilities, their relationships. So that's quite a long, wishy-washy kind of.
Throw it over to Simon. I mean, your I suppose Rupert's reporting to you. So, is it really about building something that could challenge the big three reinsurance brokers?
Yeah, ultimately, yes. Of course it is. But I think, to Rupert's point, I think it's not there isn't a target with a dollar revenue or a headcount size at the end of it. Clearly we want it to grow. Clearly we want it to be profitable. But I think it's, much like a lot of the Gallagher ambition, is about the quality of what we offer customers ultimately, and the quality of our team will dictate that.
Now that you're properly part of the Gallagher fold, what sort of things will change, if anything, Rupert?
So, one of the beauties of starting a company from a blank piece of paper, but having a very clear blueprint of what it is you're trying to achieve, is that when you come to this inflection point, this transition moment, given that everything we've done up until now has been in the vision of Gallagher, there's very little for us to do as a transition. So Gallagher don't have a reinsurance operation. It's not like we're merging with another business. So one of the unique parts of the communication to the Capsicum Re team was to say to them that there are no planned redundancies. I mean, that's a totally unique situation in M&A.
Because you had a joint venture to start with, you already built, you already had the back end and everything all plugged into the right places.
Well, there's that, but also there's the fact that Gallagher had no reinsurance business at the time when Chile and I arrived in 2013. So we started in a completely greenfield site with a blank piece of paper. We, as I've said, assimilated all the policies, process and procedures of Gallagher. We didn't create anything bespoke. We promised Pat and the management team at the time that we would deliver something in their own vision, and that's exactly what we've done. So I think that's a really unique part of this transaction, that value's been created for our clients, for Gallagher, for ourselves, but perhaps most importantly for the wider Capsicum Re team.
Well, probably a bigger question for both of you is, will there be any kind of culture change that you both spoken in the media when the deal was announced last week about the change from an entrepreneurial culture to one that's more perhaps a growth company culture, but now you're going to attract people who perhaps wouldn't have wanted to take the risk on a startup, and now you're definitely got a startup. You've got the revenues, you've got profit. What sort of things are going to change, and will the Capsicum brand stay, and that kind of thing?
There's a number of questions wrapped up in that. I think, culturally, very little, if anything, will change. I think, as Rupert said, the beauty is they're already integrated, they're grown up, aligned with the Gallagher culture anyway, which is incredibly positive. Your point about how do we get the next wave of recruits in, and it is something we said in the press last week. I think, it's facts. Some people are wired in a way that they would step out and take that risk. And, when you're starting a new entity, it is risky, and people have commitments, family commitments, financial commitments that need honouring. So it takes a certain mindset to step out, to be the initial guys into the unknown.
I think you call them buccaneers. I sort of had a sort of mental picture.
I was just trying to avoid that word.
No. I think Simon and
adventurers is probably the word I should have used. Or entrepreneurs.
Yeah, and that DNA is pretty rare. I mean, if you think about, Chile and I had a particular reason for wanting to get back into the reinsurance business. And encouraging people to come and join us. I mean, if you think about Raj Balasuriya, who was the very first guy to come and join us. I mean, he was a 25-year vet of Aon. The fundamental entrepreneurial spirit that was required in order to believe and have faith that what we were proposing was actually going to end up being exactly what it's been. But it's all very well, hindsight's 2020. But if you go back to April of 2014 when Raj resigned from Aon, I mean, the entrepreneurial spirit required by him and his team is almost unbelievable to contemplate now, and that DNA is present in all of the partners of Capsicum Re, irrespective of whether they joined early on or whether they came during the process. All of them had to make these fundamental decisions about their own lifestyles and take this risk. And as Simon and I were saying last week when we were being asked this question, that is not to everyone's liking. But now, as 100% owned as Gallagher, that fundamental risk has disappeared. And of course, being the fifth largest reinsurance broker at the end of phase 5 already gives us huge amount of momentum for going forward into reaching our aspirations, which was your first question.
Yeah, and just on the flip side of that, then with all that huge entrepreneurial effort and that excitement, there's some people who are built that way, absolutely. And then how do you keep them, that cohort of people, how do you keep them in the business and keep them excited about the next phase now?
We've kind of, personal experience actually. I've been through this when we started Alesco and then went wholly owned. How many years ago was that? That was 2014. So a period ago, and I think people bond together, they hang together, so they want to be in the next growth stage. You have to look after people financially, but a lot of it is spiritual. These are a tribe that grew up together and want to be together.
Yeah, I totally agree with that. I think it's the well-worn phrase is culture, and we have really spent a lot of time in the first phase of Capsicum Re developing our own culture. And another way of asking the same question is, well, how is Capsicum Re going to maintain that culture now that it's 100% owned by Gallagher? And I think that's one of the unique parts of the Gallagher organisation that I've come to know a little bit over the last 6 years. Some people call it the broker's broker. It is a place where people are still able to express themselves, to have an opinion, to be advocates on behalf of their clients, rather than perhaps be totally governed by process and procedure, which some might argue is the case in the big three brokers currently.
So actually, drawing on your own experience with Alesco, Simon, did anything really fundamentally change when you went 100% owned? Do you lose that? Do you lose any perception of independence? I remember when Alesco was founded, probably 10 years prior to that, that fierce independence, that you probably wanted to not mention the word Gallagher anywhere near when you're working in a wholesale environment. Is there any worry that you might lose any sense of Capsicum being independent, or does that really not matter? Because I suppose Capsicum has always been transparently a joint venture with Gallagher from day one. I just wanted to go into that.
Yeah, I don't think you'll lose anything, actually. I think, if anything, the point is the one that Rupert made. We are in the next build-out phase, and that's equally attractive to be in.
Yeah, I think there are some parts of the process that we've been going through over the last couple of months during the negotiations, and now coming out the other side, which are quite challenging if you're the architect, which I am, along with Chili and Raj and Simon Behag. We're the founders of the business, so some things that are presented as part of this process, can be quite challenging. Like, for example, the brand, which you mentioned earlier. So, innovate, advocate, inspire were three words that, weren't just plucked out of the air. They were identified by me as being the core tenets of the culture that we wanted to create, and replacing that with the Gallagher company, which is what our brand looks like now. That creates, some thought and some understanding in order to accept that change, which I think is a brilliant change. I think this is a brilliant change for us, because I think the Gallagher brand now being completely coterminous with the Capsicum Re brand is a brilliant sales tool. And I think the reason that I'm not concerned about the cultural element of the change that we're going through is, one, the cultural element of Capsicum Re is really deeply ingrained. Simon mentioned a tribe, and these are emotive words, but it's really true. We've built a foundation within the firm. We've raised over $1 million and donated that to charities. These things are really meaningful to our team. And two, because as we mentioned already, we're not merging with an existing reinsurance organisation. The greenfield site opportunity for our clients, for our markets, and indeed for our team. And I mean the Capsicum Re team and the Gallagher team are absolutely immense. If you think about our main competitors, they've had a lifetime of a reinsurance broker embedded into an insurance broker, and they've taken advantage of that situation over the last decades to create a situation where they have such a lion's share of reinsurance business. And we are still, I think, an startup in respect of that we are going to be providing a fundamental challenge, and I think clients really enjoy having this independent voice, having somebody who is not prepared to duck, is not prepared to toe the line, is prepared to advocate on behalf of their clients. And we found over the last period that that's really meaningful to our clients, and they love it.
Now that you're 100% aligned, is there any plan to look at what Gallagher's got retail globally and see places where you can leverage that?
Yeah, absolutely. I mean, the two businesses should be fully intertwined. As long as we're serving customers to our best ability, it can't really go wrong. So yeah, absolutely. I mean, we're a huge, substantial global broker now. And the pace of change within the last decade is huge, and Capsicum will only benefit from that, and vice versa. Gallagher will benefit from the kind of the specialist capabilities that we lacked before we had Capsicum.
Yeah. The word leverage is seen as highly pejorative, and perhaps rightfully so. I think what we're what we're focused on is the services and the advocacy we supply to our clients, the representation of our markets, and the opportunity to broaden the scope of that away from these specializations that we've created over time, which have now become so meaningful to us and to our clients and to our markets, and the opportunity to work with Simon and particularly the team in the US to find new avenues for applying all those skills and capabilities in the reinsurance market, in the insurance market. This is a highly dynamic and ever-changing environment that we have got some amazing capabilities to tie into.
Yeah, absolutely. I mean, these guys are closer to capital than us. I mean, and ultimately we want to bring capital forward to customers for their benefit. So, the world is changing, and this gives us a kind of really good leg up into that.
Right. Well, it seems, this deal's happened at a really interesting time for the reinsurance market. We've had the MMC JLT deal, which is obviously cascaded across the market, across retail, wholesale, and reinsurance. But the reinsurance markets, particularly, it seemed to be ripe at a time more fluid than it's been for any time since, say, that initial 2008 Aon Benfield deal. So how are you going to sort of move to make the most of some of that sort of talent that's sort of potentially able to be dislodged at a time like this?
The first impact of MMC JLT for us anyway is not necessarily relating to talent. Certainly in the last 6-9 months since the deal took place, has really been all about clients.
So you're getting opportunities to quote, you're being asked to quote things that you never got on before?
Absolutely. Yeah, I mean, there are specific examples where buyers of reinsurance for major UK institutions said to us in the immediate aftermath of that transaction, you are now part of our panel. We want this independent voice that JLT used to represent. Now they've been subsumed by MMC. We don't perceive them to be independent anymore. So you've got that gig. Come into this arrangement and start disrupting, offering advice in the way that you do. Now, one of the great benefits of completing the transaction with Gallagher is it takes away a lot of the uncertainty. Speaking candidly, there's a certain amount of limbo to the Capsicum Re story during 2019, because if you're after producers or indeed account executives in the reinsurance sector, you need to be able to give a clear understanding to that individual or that group of individuals as to what their opportunity potentially might be. And in the sort of period of uncertainty running up to, will they, won't they consummate this joint venture, that's very hard to do. That has all gone away. And one of the things that Simon and I spoke about a lot over the last couple of weeks is just the momentum that certainty is going to give us when we start thinking about how we want to add resource to our existing capability, be that in London or indeed, as we've spoken quite a lot about, in the US.
So something just occurred to me. Obviously, Gallagher very much has probably one of the greatest consummators of M&A in broking history. That if you look at the stock exchange announcement from Gallagher, is probably an acquisition of some scale once a week. Mm-hmm. Do you think now that you're fully 100% owner of Capsicum, would you is there scope for acquisition, of growing by acquisition at all?
Yeah, no doubt. I mean, this is the great thing, and I think this is one of the things that will attract talent into us. We've got a huge parent, a relatively greenfield global site in the reinsurance space, and they like acquisition. Reinsurance, from a financial perspective, if you get everything else right, it offers a great return on the dollars you invest if you get it right. And, we have our in-house experts to help advise on that now.
Are there any particular skills or gaps that you've got as Capsicum, as a relatively small player, that you're particularly keen on filling?
So, Mark, I think the interesting thing about the journey so far is that it's been 100% organic. When you start with a blank piece of paper and nothing, literally every dollar of revenue or every dollar of GWP that goes through the Capsicum Re books is a dollar that wasn't there before. So an amazing organic story, zero acquisition during that period of time. So to answer the question specifically, our competitors have been doing this for a really, really long time, decades in some cases, 50, 75, 100 years. So it's going to take us time to really catch up with them. So our aspirations, again, going back to one of your early questions, is not suddenly to be all things to all people and have a location in every part of the world where reinsurance is bought. But in the first instance, our business plan, Chile and my business plan, had a US capability embedded into the first phase, and we've achieved everything that we have achieved without actually bringing any of that to life. So Given that Gallagher is a US-based company, that it has a huge US presence, the obvious gap for us is in the US.
So where might the first sort of Capsicum outpost within the Gallagher empire be? I mean,
it's already there. Actually, we're already got a small enclave of capability in New York, in North Carolina, and also in Miami. So it's not like we're not there at all. We've got licenses and skills and capabilities, but rather obviously with more than 60% of the global reinsurance premiums coming out of North America, that is a massive opportunity. So the fundamental question for us, from a strategic point of view, will be build or buy, and over what period of time. And the very exciting part of all this is that Simon and I are just starting on that process together.
I thought it'd be really good to ask you about the market itself. I've been reporting on this market. I've been living in this market since 1992 and working it, in some shape or form in the early 90s. I was, in that hard market. But this seems like a really very interesting market turn situation that we're in at the moment. And now that you've got good timing, you've brought this thing together. You've got the resources. What opportunities do you think that this market is throwing up at you? And obviously Simon as well, in your core markets as well. Things are happening everywhere, and perhaps a joined up approach with in-house reinsurance broker, particularly smart ones that you've got. You must be excited about some of these opportunities. I'd love to hear sort of what sort of plans you might have. There seems to be so much dislocation in so many different places that we're looking at the moment.
I think you raise a really good point. I mean, hard markets aren't that regular. And there's, to be frank, there's a talent or a generation of talent that haven't seen it. And that creates quite an opportunity in itself, because I think the hard market in any sector kind of separates the men from the boys, if you like. So, that's where real customer advocacy really plays into your hands. And we've always said we're a talent-rich organisation, and that's that.
Particularly now, you've got you've got a core of a team. Some of the Benfield expertise was really renowned for going in. If the market wasn't there, they could go and get you a new market. Are you excited by that sort of prospect?
Yeah, there's no doubt. I mean, one of the things that these guys are, and I mentioned earlier, they're close to capital. And if we have the chance to bring alternative forms of capital or risk transfer forward to our customers, we absolutely should be looking at that.
I think it's a really interesting / exciting moment in the cycle. Back in the day at Benfield, mid-late 90s, we were at the cutting edge of cat bonds and securitization, and here we are, 25 years later, and if we'd been having this conversation 24 months ago, we'd be saying, look, hard market cycles, they're just never going to happen. This constant wall of capital that comes out of the hedge fund ILS world is never going to stop. They're always going to find ways to put that capital to work. And so the concept of class of 92, class of 95, whatever it happens to be, private equity led capacity creation, you're referring to Lancashire, Montpelier, firms that we were involved in helping to create. That feels like a story of a bygone era.
Do you think we're not quite there yet, are we? Or
I think it's going to be very hard. Well, I'm not saying it's impossible that private equity play will ever come back again, but I still feel that it feels unlikely. Now, if the non-CNN losses continue to come in and continue to trap capital.
Things that aren't on the news.
Listen, if you're mum and pop America and you're investing through your pension fund into insurance on the back of a non-correlating asset class, but over a 3, 4, 5 year period, you keep on being told that actually this safe 10%, 7% return or whatever is actually you're losing money. Eventually, you're going to get bored of that. And want to go back to a safer, even if it is correlating, a safer asset class. So that's kind of what's happening in the reinsurance market right now. Is that the types of business and the classes of business and the way that capital is being put to work is fundamentally changing right in front of us, and that's what's causing the hard market. Now, whether or not that is going to be so fundamental that we'll see a retraction of these, a major continuing retraction of these ILS funds, which will eventually sweep the more traditional markets back to the fore. I think that depends a little bit on what happens in 2020.
Yeah, but sorry to monopolise Rupert here on ILS, but that is the big question. What's your gut feel in terms of this trapped capital? Will it be released onto the market and sort of pouring oil onto troubled waters, or is it likely to be redeemed and then extracted from the market?
Well, I think the clues in the title mark, I think, is trapped. So I don't think it can be redeemed until it's untrapped. And the question really is, in the event that it is untrapped, the question then is, will the investors allow it to be reinvested, or will they then redeem it?
So it's still a question.
It's still a question, and I suppose in the first instance, it's the technical side of it is how to untrap it. But leaving that to one side, certainly everything that I've heard from people like Matt Fitzgerald, who are right at the vanguard of this type of reinsurance, is that yes, times are difficult, and the aggregate covers that some of the quoted shares and the aggregate covers that the hedge funds, the ILS funds, have been using to put their capital to work over the last 4 or 5 years, that is a thing of the past. They've now returned to more excess of loss event type of covers, and so that's where this tightening of the market's coming through, and we're about to go at the beginning of March to a Gallagher sales meeting, 3,500 people gathering to talk about our business, and reinsurance is going to be part of that now, which is fantastic. And we're going to be making a presentation that's titled "Reinsurance: The Lifeblood of the Insurance Market," and it's going to be quite interesting for that group of people to hear about the impact that reinsurance has on the wider market. And I think if you're not in the reinsurance market, or you're not, you don't understand the impact of reinsurance on insurance, and this is where the tightening comes. As the costs of reinsurance go up, those costs have to go somewhere, and they eventually are passed down the line through the wholesale market, eventually into the retail market. And so the tightening in the reinsurance market eventually does lead to a general tightening in the overall market.
Yeah, but just to add on for that, I mean, it's a dynamic market we're in, and our whole ethos is to manage problems. And if a capacity crunch is a problem, it will be an opportunity for someone else. So it's just where the river evolves to.
Yep. Us journalists have been talking about casualty a lot recently, and about potential casualty crunch. We've seen pricing go up in D&O. We've seen lots of excess, particularly US exposed casualty. But then we've got anything with casualty in it seems to be difficult at the moment. Starting with you, Simon, talk about some of the opportunities that you're seeing in that marketplace. Or for one, do you believe that there's a casualty kind of crisis happening, or is that too strong?
I think casualty is a very difficult market, and particularly the US casualty. I think it's fair to say we're seeing price increments. It seems to be there's some reserving issues, and also the thoughts of some of the advisors around that. So I think that is going to be quite a fraught market for a while. But ultimately, we're there to solve customers' issues, be that direct or reinsurance. So I think in this kind of market, we'll end up picking up more customers.
So do you think this harder market might be more of a sort of Ace and XL type harder market, which is casualty led rather than the sort of property cat led that we've had back in the old days?
I'm not sure that I can answer that. I mean, one of the interesting dynamics of Capsicum Re, and indeed this conversation, is that the expertise that I've brought to the project hasn't been necessarily around the broking side. It's been around platform creation, design, architecture. I think a future podcast, you'd have an interesting conversation with, the hardline practitioners. I guess I'm confessing to being one step removed from that.
We can talk about that, because actually, what else is going on? Obviously, what's been particularly interesting is obviously it's been more high profile, because everything at Lloyd's is high profile and everything is done in public. With the Blueprint One, we seem to be at a phase all over the insurance industry of finally a realization that the nettles have to be grasped, and maybe platforms are slightly burning, or at least a little bit singed, and that it's a time of the market to be reorganizing itself. And of course, when we've got the same time, we've got pressure from insurtech and other things, and potential for disruption. Are you getting excited at all by some of the Blueprint One reforms and some of the changes that are happening, but very large carriers and some of the insurtechs, and obviously what we've seen, different new insurance trading platforms appearing and all sorts of things? I'd just like to have your view on some of this new sort of new reinvigoration of some of the enthusiasm for transformational projects that we seem to have seen in the last couple of years. Are there anything that particularly...
I think in the very first instance, a great opportunity for me to get on to my favourite hobby horse of nomenclature. So whoever came up with the word insurtech, they didn't call it finantech, they called it fintech. So we should really call it instech, because that would be a much easier way for us to
my
refer
friends at
to it.
Instech London will be very, very glad that you said that.
So instech is clearly the right nomenclature, but I think again, we can go back in history. RI3K, the cat exchange that was built in
IFEX.
Exactly. IFEX was another one. That was a CBOT cat futures. Going right back to the early 90s. So there have been a lot of bleeding edge. Projects that have tried desperately to break into the inert market.
We've got. We don't need to name their names here, but there's a couple of reasonably high-profile ones. Do you think they're going to get traction where others didn't?
I think it really, for me anyway, Simon, I'm sure you've got a view, but for me anyway, it ultimately depends on leadership. These things have to be led. John Neal, I think, is doing a great job at leading and showing the way. But that leadership challenge, I think, is absolutely fundamental. It's easy to create not easy, relatively easy to create a blueprint. It's, I think, very, very has proven to be very, very difficult to get an inert marketplace to change.
Yeah, to drive implementation is going to be mission critical. I think John's doing a great job actually as well. I think the syndicate in a box, I think, could be transformational. I think that's really exciting. I think, clearly driving unnecessary and unwarranted cost out of the business, is going to be transformational for them as well. I
mean, as a wholesale broker, by trade, are you excited by some of these reforms? There's potential of being able to get into Lloyd's, access capacity, very large amounts of capacity that's all assembled behind a lead line. And in fact, probably with someone like Rupert organising some of that at the back end for you, and be able to show that to your customers and say, this is the Gallagher, our new Gallagher scheme here, which is $1 billion straight up front.
Yeah, clearly, and I think that's one of the advantages of being one of the biggest brokers in the world. And I think there's certain dynamics in the market that have changed and will change forever. And some of that's around scale.
So these are the things that you'd be looking at.
I I like to try and visualize things. So the way Simon and I have talked about this over time is if you think about it in terms of pipe work, if you can create a pipe that is very smooth and nothing can snag on it on the way through, and you can create efficiency in that way. If you have what Gallagher has, which is a huge distribution capability, global distribution capability, and you can understand the needs and requirements of both your clients at one end and your markets at the other end, that pipework can be developed to be ultra smooth, ultra efficient, and rather than it being scattered across a huge array of recipients, be they clients or markets, it can be directed as a hose can be and can be poured into one particular place. And I think if we, as leaders in the industry, can start affecting the right behavioural change with our practitioners, and really focus on the requirements of our clients in particular, I think that's an incredibly exciting opportunity. And it is partly tech driven. So the InsTech guys who are out there doing amazing things, again, if they can fundamentally find new ways of doing things, of distributing, of selling things, then fantastic.
And actually, on that kind of line, is that something that you're not, there are other things in the market, other brokers have set up, kind of technology focused arms to their businesses. Anything you're looking to doing, or have you already done it, but done it slightly under the radar so we don't know about it?
No, we have our parent in the States have a kind of tech watch department, if you like. So we're kind of always looking over the sector. And there are some things in there that are genuinely interesting to us. I think, I think we're just marking our position, if you like. I think
it's very hard, Mark, in the environment in which we're transacting, to be that, talking about reinsurance specifically, as a secondary and sometimes even tertiary market, it's very hard to be the drivers of technological change. Really the technological change or the environment change needs to happen at the front end, and eventually that will come through. ILS markets, I think, are a great example of change that's taken place over the last 20 years. That have fundamentally changed the marketplace. There's in my opinion, there's no way that they're going to disappear. They may change, they may morph, become different providers, but they're probably from a reinsurance point of view right at the vanguard of InsTech or re-InsTech, which is a word I've just created, which is great.
And I think our ability and willingness to embrace change is changing. Our appetite for change is changing. If you look at the adoption rates on PPL, if you 5 years ago you were going to say we were going to be in this position now, most people would have been sceptical.
There's something like PPL. How hard is it been to get brokers to actually use it for quoting business rather than just using it when the firm order comes in to backfill?
Yeah, we've been against backfilling because it kind of what's the right word? It becomes a farce.
Do you think it's something where user experience should really be invested in? Because I remember I bumped into an old friend in the market and said, "Are you using PPL?" I said, "No, I'm just using it when I get a firm order." And I said, "Well, why is that?" I said, "Well, I've got my clients like to have 17 different options with different deductibles and sublimits and whatever, and then the firm order comes in and it's none of the above, but it's something sort of approximate to one of the options I almost quoted."
Yeah, so I think PPM might not be the complete answer yet, but it's a significant step in the right direction, and harmonising and standardising some of the way we process our work is to the whole market's benefit.
Great. One thing I'm not sure I caught you. I need to pin you down on the Capsicum Re name brand. Is that something that is going to stick, or would it be sort of phased out over time? Or
in the first instance, there's no way that the brand is changing overnight. Again, the value in the brand has been hard fought. Simon will have an opinion, but my understanding is that Gallagher have a house view that eventually they want their brands to be similar, if not exactly the same. So over the medium to long term, should we expect at some point to see the Capsicum Re brand be more assimilated into the Gallagher brand? Absolutely. But in the first instance, we've made this fundamental move to being Capsicum Re, a Gallagher company, which is a great step forward for us. So, there's a lot of emotion around brand, and I created the brand. It's obviously a play on Chili's name, so Chili himself is very personally attached to it, as you'd expect.
But Rupert Re has a ring though, doesn't it?
Swallow Re probably wouldn't have gone anywhere. Let's be honest with each other. It's now part of the legend, right? It's part of the vernacular of certainly our part of the reinsurance market. We're incredibly proud of it, but it's going to be a Gallagher company.
The Benfield name certainly survived a very long time. So
yeah, exactly, and people still talk about that, in very positive terms. So if we can end up being regarded in a similar vein to Benfield over time, I would consider that a personally a fantastic achievement.
Okay, we're running on with time, but just quickly, from both of yours, from the insurance and the reinsurance side, just any snippets sort of looking forward to 1/4 and mid-year renewals sort of thing. What are the sort of things that you're telling your clients to be expecting in terms of where the market's going? Just forward-looking moves for 1/4 and mid-year.
From a reinsurance point of view, the general tone is one of tightening, one of hardening. It's not universal. It's in its own pockets. But overall, that's the direction of travel. I think this previous constant softening of the market, there is a line in the sand now. So I don't think there are very few places where prices will be coming off. There's a floor. And in certain specific areas, clients already will be expecting a certain amount of hardening.
And Rupert, absolutely echo that. And Rupert used the word that I would say it's a pocketed hard market. And I think, in that you need increased communication with your customers. They don't like unpleasant shocks. And, a very good dialogue and a plan around how we're going to manage it.
Great. We're coming to the end of our time. So do you think we've covered everything? If there's anything you'd like to add, any of it far?
Yeah, I'd like. I mean, this is a unique experience for me. I've never done a podcast before. I'm worried
he's going to sing.
Thanks very much for doing it. It's the first time. I hadn't done one until about a couple months ago.
No, Sweet Caroline, but it'll be interesting. I think very interesting, Mark, to hear back from you as to the feedback you're getting. I think it's a great thing that you're doing, building podcasts in the insurance industry. The insurance industry has been so maligned over time as being kind of this sort of side pocket underbelly of the city, of the capital markets, and it'll be fantastic to see how you get on with it all. And it's a brilliant opportunity for me to say to any of the listeners who are involved in Capsicum Re, either team members, clients, markets, how incredibly grateful we are to them for all their support, and indeed to Gallagher. It's been an amazing ride. An incredible opportunity to start a company from a blank piece of paper.
Any of your new colleagues at Gallagher all over the world to get in touch with you, and if they've got some ideas that need reinsurance support, then
100%. Yeah, 100%.
Yeah, and I guess I'll just add the adventure's only just beginning. I think this is really exciting. I think it's one of the most exciting things I've ever been involved in.
No, congratulations on the deal, because I remember taking the call back in the Insurance Insider news desk office 6 years ago, and I stayed late to write that story, and it was a great but we'd had difficult times before with Gallagher Re, and it hadn't worked out, and they explained why it was going to be different this time, and you're a journalist, you take it with a pinch of salt, a little bit skeptical, of course, and you've gone and done it. So congratulations to both of you for doing that. So
appreciate it.
The credit's for Rupert, actually, but yeah, thank you.
Well, actually, to be honest, it's not really for me at all. It's for the team. So sounds like we're moving into Oscars territory here, but no, really appreciate the time.
We've got to stop before it gets too gushy.
Exactly.
Great. Thanks a lot.
Thank you.
Cheers.
The Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.